Hey guys, Brian's here. Today's Thursday, July 18th, 2024. Continuing right along with yesterday's video, we will be looking at the NASDAQ and the SPY and reviewing price action as well as providing some context and trying to make sense of what's going on in the markets here today. In yesterday's video, we addressed the bear flag that was forming. We mentioned the high possibility of the markets going out to 480, and we can see that the NASDAQ ultimately did hit 480 here today. This dashed blue line on my chart is the max pain strike for Friday's expiration. But before we get into the nuances of the intraday trading, let's just take a look at the daily time frame. This is the NASDAQ. We're coming down to the 50-day moving average. So this is a level that you want to have on your charts or be aware of. It is a dynamic support and resistance level that is used on the daily time frame. It is the 50 simple moving average. So just wanted to put that on you guys' radar. We addressed in yesterday's video the differences in the characteristics of what happened regarding the gap down. So let's go to the SPY and we'll see what I'm referring to. We can see right here, this is the first indication that something was different or the markets was operating differently in comparison to how it has been trading lately. What was different was that price gapped down below the major support level of 560. We also breached the previous day's low. Not only did price open up below that low, but it ended up closing below a key support level. So two key support levels were taken out, and that's usually a sign that we will probably have some continued selling the next day, or price will struggle to go right back up from where it came from. In other words, the more likely scenarios would be consolidation or some sort of continuation to the downside. And as we can see, we ended up getting continuation to the downside. So let's jump back into the intraday time frame and let's start with the SPY, I guess, as we normally would before we jump into the NASDAQ. What are the signals that you may want to be looking for as the market opens? I'm going to turn off all of my scripts for a second here, all of the studies, so we can just pay attention to the gamma exposure levels, which was addressed yesterday. We can see this was the support that was addressed in yesterday's video. The support level was obviously taken out. We will take a look at the price action on a smaller time frame and try to see if there was a clear setup or possible entry in this region here, as price ultimately sold off to the next high negative gamma nodes, which was addressed in yesterday's video. So let's just jump over to our 3-minute time frame, which I addressed yesterday is my preferred time frame whenever I'm intraday momentum based trading or I'm looking for scalps. On this chart is the quant trading app scripts. I will be talking about quant trading app a bit in this video. However, the principles in which I will be addressing in this video is not exclusive to quant trading app members, which is why I decided to make this video public for anyone on YouTube. If I were to clear the chart, so let's just remove all the levels, so there's no levels on the chart, and if I were to remove all my studies, and let's just try to build it from the ground up, as I often like to do to show just clean price action for anyone that does not have access to anything proprietary, or you just like to trade using your standard support and resistance. Here is yesterday's support. That level was breached earlier in the morning. Price broke it. It tried to retrace. If you like to trade using supply and demand zones, then you guys know you can kind of have a general area on your charts. We will take a look at the volume profile in a second just to see if there's a way to discern this. But just looking at price action, we can see obviously this region or this area was an important level of price action here from yesterday. We also addressed what the 557 level is. It is the gamma flip level for the week. Link to yesterday's video will be in the description down below, just in case you end up being confused regarding some of the principles or concepts in which I'm talking about. So price broke down below this. It ended up trying to retrace. It failed to hold above it, and we continue to the downside. Obviously, I'm aware we're looking at things in hindsight, so I don't want things to sound oversimplified just because I'm doing a video on it after the fact. It's always going to be easy to talk about price action after the fact. However, just as in yesterday's video, I pointed out that throughout the day, I tried to provide some sort of context in the Quant Trading App Discord regarding whatever I may be thinking, and this video is kind of summarizing some of the things in which I might have been aware of or looking at throughout the day, and then I'm just trying to recap it. But instead of making this video too long, I'm just going to try to fly through some of the things that crossed my mind throughout the day and hopefully provide enough context to a newer trader to be able to try to make some sense of what's going on in the markets. So now let's layer on our gamma levels. So that's what we have right here. These are the same gamma levels that were at the start of the week that was addressed in yesterday's video. And then let's turn back on our studies, which will be the quant trading app scripts. Now the quant trading app scripts, if I just clear the chart again, are just going to provide some weekly levels, and then we have some intraday zones right here. We have this gray level is your standard VWAP. On this blue right here, this is the exponential 9 moving average. So these two here are available on just about any platform, trading platform. The proprietary levels will be this shaded area, pretty much any of the zones in which you see on the charts. And then these solid levels are coming from the gamma exposure for the Friday expiration. So it's in a sense doing a lot of the technicals instead of wasting the time having to draw all these things out on the chart. It's just applying it without having to put in so much work here. And then I just turn back on our gamma exposure levels. So let's make some sense of this right here. The market opens, and the first thing that caught my attention is we are above the 2-day anchored VWAP. In other words, once we're holding above the 2-day anchored VWAP, then I'm going to favor the long side, at least for a scalp. The understanding though is I'm not expecting an explosive, massive move all the way back up because we started with the larger time frame, and our expectation would be that price would either consolidate or it would continue down, especially with the massive weakness that we know to expect within the NASDAQ. We are expecting it to go down to 480. It's very hard for the SPY to rally if the NASDAQ is not rallying with it. So if we jump back to this, the start of the day, the first thing I'm always going to take note of is where is price action in relation to the 2-day anchored VWAP. The 2-day anchored VWAP is this level on my chart right here. So we are above it. Where is the 9 exponential moving average? It is catching up to price action. And once it catches up to this area right here, this becomes an interesting area to take a long trade. I happen to have scalped this trade, but as usual, these videos are not just about the specific trades in which I take. I believe earlier in the day, I was just looking for additional confluences. So if we pull over the Discord here, let me just see what I was looking at. So I pointed out that the ADD was strong all morning. So that alone, plus the combination of the 2-day anchored VWAP, and I like what I was seeing with price action. I like the 9 EMA. I decided to take a scalp on the ES, just scalping it back up to the high of day. So it was a quick scalp here for me. And let's head back to the chart and see this is where my thought process was at the time. It was the combination of the 2-day anchored VWAP. I liked that price action was holding the 9 exponential moving average. I liked that the ADD was trending up. And I also liked that if we check out the NASDAQ, I liked that the NASDAQ was in the quant trading app intraday zone. So this is the intraday lower level right here. So I liked that the NASDAQ was here. I liked what I was seeing on the SPY. And my expectation would be that the NASDAQ would bounce back up to VWAP as the SPY was holding its levels, and this provided a nice quick scalp back up to high of day. I did not participate in this breakout here as it was just a scalp from here up to here. That was enough for me. But as we continue to move along, what else can we learn from this chart? Let's clear everything off the chart once again, and let's just take a look at what do we see on this chart. This is a trend similar to the one that was pointed out yesterday. So we have this right here. It's a similar type of trend that was happening here today. Once this trend breaks, what do we get? We get change in sentiments. This is for day traders. This is for scalpers, by the way. So this actually applies on any time frame. But when we're looking at these micro patterns, this is for a quick scalp. Here comes the break of this uptrend. This is an uptrend because if this is the low, this is a higher low, this is a higher low. Price breaks down below this trend. What happens? It sells off. So this is for you price action traders that just know how to read a clean candlestick chart. This is the way a lot of traders are going to be interpreting this. We know the overall sentiment, at least for the past couple days now, has been bearish because we can just take a look at the chart. Where did price come from? It had a massive gap down below some significant levels. Yesterday, it continued to trend down and we closed down. So the next day, even though price has gapped up, bears are still looking for an entry to be short. This right here, they're going to short the first break of strength. This is that break of strength. So they come in aggressively and they get their selling. Now what happens? Price puts in a new low. Once price puts in a new low and it retraces, it's going to take extra momentum and extra strength to reclaim this key area. Let's turn back on our studies. Let's turn back on our levels. Everything that you learn should be able to be applied to a clean, naked chart, by the way. I'm just adding these extra things because for certain traders, it creates a framework or it allows you to create a system for yourself, which can make it a little bit easier for yourself. For me, a core principle has always been the 2-day anchored VWAP, the standard VWAP, and then if I'm momentum-based trading, the 9 EMA. Quant Trading app came later on in my trading career and allowed me to have more conviction in my trades, and then obviously the gamma exposure added even more conviction. So let's head over to the NASDAQ because I think the NASDAQ's price action was a little bit more interesting today here. And let's zoom in. So we know our target 480 for the shorts. What do we have earlier here in the day for the NASDAQ? it gaps up and immediately sells off to the 2-day anchored VWAP. It's barely holding it. But what do we see right here? VWAP is going down, VWAP is going down, and VWAP is going down. So the NASDAQ is below VWAP. That's not a good sign for bulls. It's always going to be different. Let's just say price action was, let's make a clean chart again. Let's just say price action is all the way down here and VWAP is all the way up here. That's different because price action is so far extended from where VWAP is, and that's going to make some bulls interested because the expectation will be price will eventually make some sort of an attempt at reverting back to VWAP. That is different when we're looking at this type of price action. VWAP is right here and price action is right here. That's pretty tight. There isn't much room in between where price is and where VWAP is. So we can see this pressure is just pushing down. It's pushing down on price. You can think of it that way. It's pushing down on price. So yes, the NASDAQ did break down, but then it was met by some sort of support here. This is the quant trading app intraday level, and it ended up bouncing right back up to VWAP. Now it's met by the 2-day anchor VWAP, and it's just struggling to hold over it. As it does not reclaim VWAP, again, on the larger context, we have some sort of larger idea or targets for where the NASDAQ wants to go. So it's built upon the context from the larger time frame. For purposes of this video, and again, for any video not making it so long, I'm just going to glaze over concepts like gamma exposure. We already knew about the 480 level from yesterday. It was addressed in yesterday's video. On the SPY, we're aware of these significant strikes. If the SPY failed to hold 570 right here, we know where the next high negative gamma levels are. So 553, it's not surprising that this is ultimately where it ended up closing. This is for Friday's expiration, by the way. On top of that, this Friday is a large monthly OPEX. How do we know it is a large OPEX? That is objectively speaking. There is a lot of open interest for this expiration. So we can see right here how much premium is in this expiration relative to all of the other ones. The next largest OPEX that we have coming up would be this one right here, which is the August 16th, which is the next MOPEX, which is the monthly options expiration. And then we have a really big one right here, which is the September expiration. So around these expirations, price will gravitate towards key strikes. Something like max pain might hold a little bit more significance. So in the NASDAQ, max pain was 480. Again, this was pointed out on yesterday's video, and that's what's on my chart right here. That is built into the quant trading app intraday script. That is that blue dash level, and it's letting us know 480. So we have some sort of an idea of some sort of contextual awareness of where price may go or may want to go. That's why it's not just, oh, price is rejecting at the 2-day anchor VWAP. It's rejecting at the 2-day anchor VWAP, plus it probably wants to go down to 480. This solid green level on my chart is the quant trading app 2 sigma level, which is a very significant level that we're all aware of. Now, the 50% retracement is also something that is a cornerstone of my trading. So let's just turn on the fibs. I'm going to clear this chart again because I like to show things with just clean price action. And if we draw from the high of the day down to the low of day, what happens with the price here? So it sells off and then it bounces right into this, what's referred to as the golden pocket, as some traders might refer to it. It's just the spot between the 50% retracement and the 61% retracement, anywhere within this region. This is where we can expect pivots to happen in price action. So price sells off, it bounces, and then it's going to want to complete its next leg down. These are just extensions on the Fibonacci retracement. Something like the fibs is good to have in your toolkit. As we can see right here, let me just see what might have been pointed out. So just as it's getting rejected, the shorts are being rewarded. 480 again was the target from yesterday, as we're aware of. This is some extra stuff that I'll skip over for this YouTube video, again, just to save on time. Next, we start considering, well, where might the market want to, bounce or recover from? So one trader asked, just sharing some of my levels that I already have on my charts for the SPX. This is a key level to be aware of, is the previous all-time high. And then we just have this trend line here. So again, layers to the context in which one is looking at the market. So if we jump back to this here, let's minimize this and let's pull open the ES. Again, hours before price gets to these key levels, this is where we head down to at the low of the day before we see some sort of bounce into the close. This level is just coming. This is just basic technicals, just being able to spot it on my charts, just drawing. This was the previous all-time high. This was a nice rejection. So this level was just extended. And since last week, it was already a level that I just left on my chart. Now, once this level has been hit, I'm not someone that likes to keep a million levels on my chart. So I will eventually clean this up here. I do want to point out for this video, however, the 530 level right here is a significant POC to be aware of, as it was a POC for a couple weeks. We can expect some sort of key price action around here. So definitely mark that off on your chart if you have not. Let's head over to the NASDAQ futures. These are the same zones pointed out yesterday. What do we get? We get a breakdown below this zone. What happens? Price retraces to this zone. I'm going to save time from pulling up the Discord every single time, but just know again, as the market is open, this is the approach, or this is the way I'm thinking about the markets. As many traders with a lot of screen time will be looking at multiple different confluences. So what do we have here? Price hits 480. And earlier in the day, pointed out, this is the capitulation volume that was mentioned yesterday. This is what you want to see, a spike in volume at a key level. If you're taking some sort of reversion to the mean, some sort of scalp, if you're taking a counter trend trade, this is a very strong downtrend intraday right here. You don't want to buy just because you see this green candle. This is not really anything that significant. This green candle right here, it's just matching the previous volume from the selling pressure. You want to see something like this, as this can be seen as shorts are covering their positions. A target has been hit. This is new buyers potentially coming into the markets, and the same works in reverse. So 480, significant strike. Look what we see right there. So let's turn back on our studies. This is our 480 level. We have a lot of context. It is the QTA 2 sigma level. It is the max pain level. We see volume coming in. We had a massive extension, but what do we get? We get a break and retest. So price has broken. This is our intraday zone. So price has broken below that zone, and then it retests the zone. So this is that first retest, and what do we get? The next leg down, break and retest. If you're not a momentum-based trader and you missed this move, you can always wait for price to make an attempt at retracing back to your level. It didn't even retrace back to VWAP in this case here, but it retraced to this level and we get the rejection down. You can expect to see me point this out on a lot of YouTube videos. I've pointed out on a lot of videos in the past, but I'm going to start highlighting this more and more, as I think the break and retest is the best approach for new traders. It eases a lot of anxiety. It's much easier to be comfortable taking these trades because you've already seen price has proven that it's heading in a certain direction. You're taking the trade on the backside of the move. So if you're slow to react as you see this type of price action, you may be intimidated, maybe scared. There's usually going to be another entry. On top of that, if you see a doji candle, if you see a spinning top, if you see any type of indecisive candle right at your key strike, that is an indication that can confirm your move of the next leg down. Lastly, some extra things just to take note of for moving forward. The ADD ended up reversing later in the day here. We can see that the VIX did go higher. So we had confirmation of selling from the proxy for implied volatility. As mentioned yesterday, if implied volatility is increasing and we're using the VIX as a proxy for implied volatility, that's giving extra wind at the backs for bears. In other words, shorts have a little bit more of an extra reason to stay in their short trades. It's only until we start seeing the VIX put in lower highs and it starts forming a downtrend. If we start seeing the VIX start looking like this, that's extra reason to potentially look for long trades. But while the VIX is going up intraday, you probably want to avoid going long unless you see some sort of clear divergence, but we didn't really get a significant divergence. As the VIX went higher, at the same time, the SPY went lower. So let's pull up the SPY. So the SPY went lower and the VIX went higher. Therefore, we did not get the divergence that I love to talk about. It is one of my favorite setups when I like to look for some sort of bounce in the markets. The areas in which I would expect the markets to try to revert back to will come largely from the gamma exposure. Obviously, we have a gap on the chart right here. I would like to point out there are some massive potential supply zones up here in the NASDAQ. This area here, large POC, large POC, large POC. Pretty much this whole area right here, I would imagine would be some sort of massive supply zone if the NASDAQ, for whatever reason, bounced all the way back up to 2,500. We are in the midst of earnings season, so obviously anything can happen. Let's just say some massive bullish news comes out, and if the Nasdaq can reclaim this area, then I would say that would probably break the backs of shorts once again, and price will push higher. But for the time being, as long as the Nasdaq remains below here, the bears finally have a clear zone to feel comfortable shorting below, because they don't have to worry about an infinite stop loss. There is a key area to be aware of. So just wanted to point that out. Regarding the gamma, if we pull this up right here on our Qs, we can see 480. As long as the Qs are holding above 480, there is a decent potential or a decent shot that it can get to 85 if it can reclaim 82. This is for Friday's expiration, so just one more day left in the markets. I highly doubt we'll break over 92 right here for this week. If we head over to the SPY closed around 553. If for whatever reason it catches a bid and it starts to rally, this right back around here, which is the gamma flip 57, 58, so right around here is where I would expect it to meet some sort of potential resistance. And for the SPX, the levels to be aware of is 550, 585 right here, and for supports 510. So 510, we see a little bit of positive gamma right here. We have the max pain strike of 530. So 530, 510, two key strikes to be aware of. 550, if it can get above 550 and hold, I would expect price to be a little bit choppy around here. But if it can get back above this, if we see implied volatility decreasing, then the expectation would be an attempt at 585 with a last final strike for this week here would be 5600. I don't think we would get back above 5600, as there's only one more day left in the week, and I don't think the market made a massive jump after the market closed based on Netflix earnings, but 5600 is right here, so that's not too far away from price action right now. That is only a 60-point rally or so 55-point rally, so not too bad. Possible and couldn't make for an exciting way to end off the week. If you like these daily recaps of price action, I'll try to squeeze in them as much as I can, and ultimately would love to get them even shorter. If I could get them under 15 minutes, that would be ideal. But I'm talking about the Nasdaq and the S&P 500 condensed into one video with all sorts of multiple confluences. Let me know in the comments down below. Like the video, share it if you learned something. Thanks for watching, and I'll catch you in the next one.